Hi, my name is Pink and I'm CEO of the Las Vegas Real Estate Network. And today we're going to talk about short sales because a lot of you have been asking me about it given the real estate downturn. So I've invited Richard Brodkin.
Hi, Pink. Nice to see you again.
Nice to see you. Of the Brodkin Group. And he is a real estate expert who knows a lot about short sales.
I know an awful lot about short sales. I don't like to project myself as an expert. I am a certified short sales specialist. That's my designation. And my team does a lot of short sales. That is our predominant part of our business right now.
Well, could you tell our audience what a short sale is?
Absolutely. Being 5'7", I know a lot about short selling, but no joking. Short sales are a big part of the market. Anybody who bought a home after 2004 probably is in a short sale situation, which means, unfortunately, they owe more on the property than the current market value of the property. For example, if they purchased a home for $300,000 and they did a conventional loan, which would be putting 20% down or $60,000, they would have a loan balance of $240,000. With the downturn in the housing market over the last 3 years, unfortunately, that property is probably valued at about $150,000 right now.
So they bought it for $300,000. It's worth $150,000, and they have a $240,000 loan on it.
That means they have a $90,000 problem that they are underwater.
So what are the options for someone who's underwater?
They have multiple options. We believe that short selling is the best option. It has the least minimal impact on their future. But unfortunately, most people choose to do nothing. Okay, and then they wait for the bank, okay, who's not going to allow you to do nothing. And then the bank takes a proactive position and starts the notice of default and the foreclosure process. And within a year, typically, the homeowner is no longer a homeowner.
And that would be a foreclosure.
That would be a foreclosure, absolutely.
So what impact does a foreclosure have on a homeowner? A
foreclosure is a very serious financial impact. It typically hits the credit score for about 250 points immediately.
250 points?
Yes. So if you had a 750 sterling credit score, you would probably see your score go down to 500, 520. Yes.
So what would be the impact of that?
It has major impact. It has major impact on everything you do, okay, from life insurance, health insurance. They all pull your credit score, and they have some charts, actuarial charts that talk about credit score, and they will raise your premiums on your car insurance, life insurance, health insurance.
How about if I had credit cards? Would that impact it too?
Absolutely. You're going to get a much higher rate. Your rates could go up to the maximum levels, or they can reduce the amount of your credit or give you no credit at all. And the other thing is that a lot of people don't know, it does affect job opportunities. When a lot of employers are pulling your credit right now as a testimony to see what kind of character you have. And if you've done a foreclosure or bankruptcy, some police departments, fire departments, and other employers will look at it negatively.
So does a short sale impact your credit as well?
It does. It affects you to about the tune of about 75 points.
So that compares to 250 for foreclosures.
Absolutely. But more importantly than the score itself, it says that you took a proactive position and satisfactorily negotiated your loan obligation with the lender. And it will say that directly on your credit report, which is a much more favorable position.
That's really important because credit can impact so many things. Well, how does someone go about doing a short sale?
Well, the process is pretty clear. The bank really lays out the rules, and we have at the Brodkin Group all the requirements. Most of them would require a hardship letter. Okay, they're really not in the business to immediately relieve you of your obligation that you signed up for. So they'll require some type of hardship, which is not too hard to have happen right now.
What's a hardship?
Your hours have been reduced at work. You've lost a job, a marital status change, a health issue. And really, most people have that kind of support documentation to justify the short sale. But the bank would require that. So you would submit, you list the house, you get it sold, and it's a great time to sell right now. I mean, homes are selling very quickly. Then you would submit the purchase contract along with the hardship letter, and then the process starts. And it can take anywhere from 2 months on the low side to up to 5-6 months to get the sale done.
I heard there's some kind of a tax impact for short sales.
Great question. Thank you for asking the question. We have what we call the Mortgage Forgiveness Act that's going to expire on 12/31/2012.
This year?
This year.
Wait a minute, we're already
5.5 months from now.
Wow.
And this is very, very important. So right now, the IRS is forgiving homeowners who do a short sale for the deficiency. So that $90,000 that we were talking about, there are no tax implications in 2012. However, right now in 2013, that $90,000 deficiency gets treated as ordinary income, and you will be taxed at that. So if you're at a 20% tax rate, that's $18,000. That's going to affect your tax.
That's a lot of money,
It's a big deal.
especially if you're in the position of doing a short sale and have the hardship.
So we're recommending that people, who are considering short sales, talk to their real estate agent and really get the property in the listing process prior to July 15th to have a great chance of it effectively closing on December 31 to take advantage of the Forgiveness Act.
Because otherwise they're really taking a risk. I mean, I've heard some people say it might be extended.
It may, and this is an election year, and I certainly don't have the crystal ball, and I would not advise my clients to bet on anything Congress is going to do right now, because Congress seems to be paralyzed, as you know.
So does it cost people? I mean, do they have to pay for, say, the real estate commission when they do a short sale?
No. Okay, that's the beautiful thing, and I really want to advise the public out there is there are a lot of scams out there, Pink, right now. And anybody who's asking for any upfront monies to do a loan modification, please don't do that. Okay, if you do a short sale and you list it with the Brodkin Group, we've had great success in having our homeowner have little or very little financial commitment. If you have strong financial resources, the bank may want you to get a little blood in the game, okay? Mm-hmm. But if you really are very weak financially, they can't get blood out of the rock, as they say.
That's true.
And we've done a lot of successful short sales, getting the deficiency waived without the homeowner bringing anything to the table.
So what if the bank doesn't waive the deficiency?
If the bank chooses not to waive the deficiency, which is a rarity right now, okay, I'm going to suggest to my client to not do the short sale. There's no value to them in doing the short sale, and to stay in the house as long as possible, rent free, and move forward and allow the lender to do the foreclosure process.
Now, thinking from a bank standpoint, what's better, a foreclosure or a short sale? That's
a great question, because that is the answer. Because the bank is only thinking of it from the bank's perspective, and they've learned over the last 2 to 3 years that financially, and that's all they care about, is their net, that they're going to get 20 to 30% more money doing a short sale as opposed to a foreclosure. Okay, because the foreclosure, the people leave the home, they destroy the home, they don't take care of the pools, the grass grows, and the values of the homes deteriorate. So the short sale, the homeowner still has pride in the home, there's a win there for them. So the short sale is more of a win-win-win situation, as opposed to a foreclosure where there's a lose proposition there.
When we were talking to Rich earlier, we put a clock on the Las Vegas real estate
I saw that on
yeah.
your website. That's awesome. I mean, it reminds me of the national debt, the trillions every second. I was pretty impressed by that.
Well, we just wanted to make sure, because, I mean, they're really running out of time
Absolutely.
to do this.
Again, as I said earlier,
because they have to close it to be able to get that tax
closed.
Right?
It cannot be in escrow. Must be closed by December 31, 2012.
And how long does it take to close?
Anywhere
a short sale?
from 3 to 6 months.
So three to 6 months.
It's time. Do it today.
Wow. Please continue to check for videos that we'll be doing in depth, like we did with Rich Brodkin, on the Las Vegas Real Estate Network. Thank you. Bye-bye.